Well, it is a very strong signal of the comeback of IPOs in Europe, in particular in continental Europe, in particular on Euronext. Since the beginning of the year, we have welcomed 11 listing, many international listings from Spain, from Greece, and that's the proof that this single liquidity pool, this single order book, this single technology platform, which is today trading about 10 billion euro of equities per day, which is approximately twice the size of the equity market in London, is attractive for international listings and for great companies like TVC. So that's a signal of both the success of the Euronext platform and the competitiveness of the Euronext platform, and a signal of the IPO market being back.
You mentioned 11 listings. We had 64 new equity listings last year. Do you think you're going to surpass that now as you look at the pipeline?
I think the worst is over. We have a very thick pipeline. We have a very dynamic queue of both domestic EU companies and also international companies. Any international company that looks at listing in Europe now looks at our Euronext markets. And because this is a single market, a single liquidity pool, a single integrated platform, and they look at Euronext as a place to raise equity. And last year we had international companies like Ferrovial or Coty from the US coming to Euronext, and we have a very impressive pipeline for the months to come.
Yeah, Stéphane, I mean, many deals were postponed in 2023. And the question becomes, is the market ripe now for all of these listings? And I say that just because you still have the geopolitical tensions happening in the world. Economic stances are not necessarily set out the way one would definitely like. Volatility still remains high.
The real driver of equity valuations and equity markets for the past few years has nothing to do with the geopolitical events. It was massively driven by visibility on interest rates. The reality is that in January 2020, any index you can think of was significantly lower than the level of the same index today. And it was before COVID, before Ukraine, before energy crisis, before slowdown in China, before tension in supply chain, before inflation, before interest rates rise. So what has changed and what has massively impacted markets is the fact that we have now some visibility on at least a plateau on interest rate rise, and potentially a slowdown and a decrease of the current level of interest rates. And this is moving flows towards equity markets, and this is unlocking the appetite for IPOs. And that's what we are observing, at least within the largest equity market in Europe, which is the Euronext platform, because today we trade approximately 25% of the equities traded in Europe on our integrated market.